From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 14th, 2016. Now there are several high-impact news events over the next few days, and this is a good time to evaluate your risk management practices to ensure sustainable trading in the event that the market doesn't do what you expect it to do. Today, we're going to be taking a look at the USDJPY, the US dollar versus the Japanese yen, for today's trade analysis. We're starting here on the daily time frame, and as you can see here on the daily, this currency pair has been in an uptrend for quite some time. Even prior to the election at the beginning of November, we started the uptrend, finding the lows down there towards the 100.0 level, started moving higher. Election just gave it a boost and sending it all the way up towards the 116 level at the very top of the chart. Over the past several weeks, we have been challenging and testing new multi-month highs, and even this week so far, we've challenged a new high all the way up there into the 116 level. Pulling back a little bit as we prepare for this high impact news and the potential change of interest rates in the U.S., we've seen a pullback and now settling down into support. The pink shaded area at the very top of the chart is 114.90 down to 114.55. That's representing historical support and resistance. It's a historical decision zone, and really all I have to do is zoom it in a couple of times here and you can see the resistance back here. So we know with some fact that this area right around the pink zone, 1, 2, 3 days specifically touching into the pink zone, has been a decision zone historically where buyers exited, sellers entered. We call that resistance. We often know that resistance can help us identify future areas of support. So that's what we're looking at, 114.55 to 90 as our current area of support. Obviously, the trend direction's up. I put even a shorter trend line here, this black one, to represent the most recent surge higher that this currency pair has taken. Like I said, it's come back into the pink zone on a little bit of a lull before the storm, if you will. Now, on the chance that they do not change our interest rates, if the interest rates remain the same, I think we see the reaction the opposite of what you would expect, which is to go down. I think we'll look for that reaction to go down if they do not change interest rates. If they do, obviously the market is anticipating the potential of a change, and we may see it tackle higher levels up towards the 116 or even higher above the blue shaded area. So if they do change, we would look for this to find support and go higher if they raise interest rates. If they don't change, the possibility of a break of support and a turn lower is a strong possibility if they do not change the rate. So that's what we're looking at today. If you're looking for low risk, high reward opportunities, it often means that you want to buy into support. So at least right now, your lower risk, regardless of the news at the current moment, if you were going to buy this, your lower risk opportunity is to buy into support into the pink shaded area, and right now just doesn't really give you any confidence to go short. There's no reason to go short. We haven't broken through support, we haven't created any lower highs or lower lows, so there's no reason to go short, but it's more confident right now to go long in the direction of trend from the pink shaded area, with the caveat that we have highly sensitive news coming up over the next couple of days. Let's take it down to the 4-hour time frame, zoom it out a little bit so we can see this a little bit better. Again, there's our resistance back here on the left-hand side. We see the support over the past day and a half or so sitting on top of the pink zone. If you're looking for a long opportunity, if you're looking to buy it prior to the news, the pink zone is a place to do it. We know that really at this point you don't want it to break that pink zone if you're going to go long. So the pink zone's it. If you're looking to be more aggressive, take on risk, somewhere around 114. 0.80 I think is inside that pink shaded area, and that might be your opportunity to go long right now to give you your minimal risk. If you're looking to go short, obviously right now the past couple of days should tell you that this is not the good place to go short. So keeping in mind our news today, keeping in mind we're at support, I think overall we have a long or bullish bias here for this currency pair, but keeping in mind news can change all of that as we go through the day today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.